It is my great pleasure to be invited to speak at this FIA Japan 2021 virtual conference. Commissioner Himino of the FSA highlighted their efforts to expand Japan's role as an international financial center. Please let me elaborate on how JPX will collaborate to this important project. Japan as a financial center offers many advantages, including socio-political stability, a business-friendly climate, coupled with the third largest economy in terms of GDP, and lastly, an abundance of household financial assets. That being said, the Global Financial Center ranking published by the Yen, a think tank in London, suggests that Japan has room for improvement in the financial service sector. As an exchange, we will live up to our responsibility and enhance the development of the Japanese financial sector. Globally, Japan's stock market capitalization and trading value are ranked third, respectively. Overseas investors account for about 60% of the TSE's trading value and 30% of the stock holdings. In addition, more than 70% of derivatives trading stems from overseas-based investors. These figures illustrate Japan's importance as a trusted global capital market. Upon further examination, we can see there is a significant gap between the stock trading value of the US, China, and that of Japan. Yet, Japan's derivatives trading volume is ranked 16th globally. Boosting liquidity will be critical for the functioning and robustness of our markets. In this regard, we see untapped opportunities in Japan's dormant massive amount of pension and household financial assets in excess of 1,900 trillion yen. More than half of household assets, the equivalent to 1,000 trillion yen, are underutilized as bank deposits. If 10% of these were invested, 100 trillion yen will flow into the capital markets. At twice the amount of outstanding ETFs held by the Bank of Japan, it will bring the essential diversification to the investor ecosystem. This investment flow is also sizable compared with the current market capitalization of 700 trillion yen on the first section of TSE. Therefore, the amount is significant enough to have a positive impact on the Japanese economy as a whole. It will lead to the further cultivation and sophistication of asset management services. In addition, it will become more attractive for overseas asset management companies to join the market. We as JPX are engaging in various initiatives aimed at creating markets that are attractive for investors to direct their assets towards the capital markets. Please let me briefly elaborate on the three key elements we have identified to realize this ambition. First, we will expand our lineup of listed products and bolster the investment appeal of our markets. TSE has been actively supporting the enhancement of corporate governance of listed companies. In 2015, together with FSA, TSE introduced the Corporate Governance Code. Through periodic revision of the code, we continue to push for better corporate governance of listed companies. In April 2022, we plan to review the TSE cash equity market structure by reorganizing the current market segments, first section and second section Mothers and JASDAQ, and streamlining them into three market segments: standard, prime, and growth. Through the revision, we aim to achieve ambitious goal of contributing to the sustainable growth and enhancement of the corporate value of listed companies and SMEs, thus building a capital market that is attractive to domestic and foreign investors alike. In particular, the prime market will reflect the new concept of the market capitalization of tradable shares and higher corporate governance standard reflected in the revised corporate governance code. After Q2 of this year, we will implement the revised corporate governance code. In September, we will begin the process for listed companies to transition into the new market segments. We intend to make this market restructuring meaningful for our listed companies and other participants, and to proceed with our ultimate goal of providing an attractive stock market. On the derivatives side, we completed the transition to a comprehensive exchange in July last year. Investors who trade Nikkei 225 topics and the JGBs at OSE can now trade commodity derivatives, including gold, platinum, rubber, and agricultural products on the same platform. Trading has been steadily growing since then, and we will continue to expand our customer base and slate of products to promote growth in the market. We will list the CMA Group Petroleum Index futures in September of this year. This is a new futures contract linked to the price of WTI, gasoline, and heating oil futures listed on CME. It is also a new endeavor for CME, and we are excited to cooperate with them to list these products. We are also committed to improving the electricity futures market, which has vast growth potential. Japan is the fourth largest electricity market globally, with the size of 1,000 terawatt hour. It is also considered the world's largest liberalized electricity market as a single system. The trading activities on the Japan Electric Power Exchange, so-called the JEPX, the physical spot market, continue to grow and now account for 30% to 40% of the total electricity demand. Japan already has an immense power spot market. Taking into account that the size of the major power futures markets is several times the size of the spot markets, the potential of the electricity futures in Japan is substantial. In January, we all witnessed the unusual spike in power prices, hitting new highs day after day due to a tight supply and demand for electricity. It was an extraordinary event, but it did have a silver lining. It has prompted electric power companies to become more aware of the importance of mitigating the price volatility risk. JPX is working closely with those involved in the power market to better serve risk management needs. In fact, the number of market participants and open interest continue to steadily increasing. We also hear from industry participants that they are interested in trading cross-commodity spread strategies between electricity and power generation fuels, such as crude oil and LNG. LNG is one of Japan's vital energy sources, presenting cleaner alternatives to the use of other fossil fuels, such as coal, and as LNG is becoming increasingly important due to growing awareness of environmental issues and ESG, we aim to list LNG futures in the fiscal year 2022 to support and ensure its stable distribution. Second, we will maintain our technological capabilities and continue to build up our competitive edge. In the age of algorithmic trading, system robustness and determinism are key for the success and reputation of the trading venue. A year ago, we saw the number of derivatives transactions increase rapidly due to the extreme volatility caused by the COVID-19 outbreak. However, equipped with enough capacity, our system functioned smoothly and efficiently without fail. In September, we will renew our derivatives trading platform, further expanding capacity and making upgrades to improve overall users' expectations. Third, we will ensure offering high-quality liquidity coupled with the most diverse distribution channels. A sound and healthy market requires a wide range of market users, including liquidity providers such as proprietary traders and market makers, retail investors, institutional investors, as well as producers and consumers of commodities. We will strive to bring these participants into our markets for all over the world. Last month, for our cash market, we launched Connector as an RFQ function to improve the convenience of the ETF market. In the derivatives market, we have improved access to our off-screen trading and have launched a service that allows OTC trading to be easily executed and cleared on the exchange. The JNET portal is well received and is used by many brokerage firms and OTC brokers. Additionally, we are engaged in several awareness-raising activities to encourage individuals to redirect their financial assets from savings to investment. As the recent event suggests, individual investors are playing a more active role in the market. We believe that the structural change are happening before our eyes, and individuals will continue to play a more significant role as the market evolves. Furthermore, to enhance the convenience of Japan's capital market and to strengthen its international competitiveness, we plan to open up the derivatives market on national holidays in the second half of 2022. Japan has more holidays than overseas, but the market moves regardless of whether Japan is open or not, meaning that there are times of missed opportunities. The introduction of derivatives holiday trading will enable investors to respond swiftly to the changes in the global economic conditions, even during Japanese holidays. Finally, as the government promotes initiatives for the International Financial Center, JPX will do whatever we can to facilitate these efforts. We will continue to be the market of choice, offering highly liquid and attractive markets for cash and derivatives, where participants can trade with confidence. The public and private sectors will continue making efforts towards establishing Japan as the international financial center and the leading hub in Asia. Thank you very much.
So Yamaji-san, thank you very much for your keynote speech. We have a couple of questions. One that interests me quite a bit was, how will the new market segments on the TSC affect the derivatives market? Will there be new products or changes in the products?
Well, thank you very much for the question. I think recently we conducted the so-called public comments on the development of the listing rules and the review of indices. And with regard to derivative products, we will study this issue further, discussing with market participants and decide how to respond in the matter that meets the needs of users and minimizes the impact of the transition.
Thank you. Another question, the comprehensive exchange or the comprehensive market, it's come quite a bit. Where do you see this going as a next step?
Yes, as I told you in my keynote speech, that since we migrated some of the products from TOCOM to OSE, the trading volume has been steadily growing since then. However, at the same time, we are not satisfied with the current volume at all. That means that we will continue to make our utmost efforts to focus on the promotion of the products. And also we are going to think about trading rule divisions so that we can make the market more attractive for more number of investors all over the world.
Thank you. One last question. So now that it's been announced that you're going to be moving to the TSC or head up the TSC, what do you think will be the biggest challenge for the next CEO of OSE?
Oh, that's a very good question, I believe. I think, as I told you, at this moment, the current trading volume for the comprehensive exchanges, especially those products migrated from TOCOM, is not good enough. We believe that we can improve this very much. So the next CEO of OSE is going to focus on this. But at the same time, we are going to launch the new trading system in September of this year. And this one is so-called JGate 3.0. And we are going to enhance the capability and capacity of a trading system very much. And successful and smooth launch of this trading system would be also another very important task for the new CEO of OSE.
Yes. So again, thank you very much. Again, every day I think at FI Japan, we think about what can FIJ members do to make the Japanese derivatives market better. And obviously OSE and TOCOM plays a very big role in that. So again, thank you very much for joining this event as a keynote speech. Thank you very much.
Thank you very much, Mike. And we'll keep in touch.
Yes, thank you very much.